Karthik, thank God you're here.
Yes.
I'm late to the party as usual. I haven't saved any tax. Is it too late?
No, don't worry at all. We've got still some time to go. And within about 5 minutes, I'll tell you exactly what you can do. And it'll solve all your problems. Don't worry.
Hopefully you'll tell me what I can do next year as well. So we can run through everything that I can do.
Absolutely. Yeah, absolutely. So now, the first things first, the most popular section, Section 80C, and which is where we all take the maximum benefits, right? How do you know whether you have some benefit available here? The first thing to do, now if you're not salaried, this may not apply to you, but you have the entire Section 80C, which is 1,50,000 open for you if you're self-employed. But if you're salaried, look at your salary slip, all right? See the deduction that's going in your provident fund. Right. Now, once you see that, you will see maybe 60,000 is going. Let's take an example. So if 60,000 out of this 1,50,000 is going away to your provident fund,
you have 90,000.
You've got 90,000 left. And these are all your options. So you've got a whole variety of, so you've got child policies, you've got PPF where you can invest, you've got NSVs, you've got LIC policies, you've got unit-linked insurance plans, you've got ELSS, 5-year fixed deposit, you've got pension plans. I mean, these are a whole variety of options where you can invest your money.
And you can make multiple investments or just one under any one bucket for that 90,000.
Absolutely. You could spread it all out, or you could do just one particular investment, right? Then there is another interesting deduction that you can get under Section 80CCD.
All right.
Now, that's an additional 50,000 which goes to NPS.
Okay.
Again, this is applicable for both salaried as well as
National Pension Scheme.
That's the National Pension Scheme. So if you want to save some additional tax, you got some cash flow available, last minute investment, you can still do this thing.
All right.
80D, this is another popular section. So you can pay up to 25,000 rupees of premium. So if you've not bought a health insurance plan already for yourself, or if your health insurance is anything less than 5 lakhs, then please consider buying a policy, upgrading yourself, and 25,000 you can pay for yourself. Don't forget, if you've got senior citizen parents who are above 60 years of age, you could even contribute 30,000 to buy a policy for them.
So that's another 55,000 that can be deducted from your...
And not only that, there's yet another 5,000 in this category. So if you do a preventive health checkup, now a lot of us after a certain age of 30 or 35 are recommended to do a preventive health checkup. When you do that, if you spend anything 5,000 and upwards, you get another deduction of 5,000. So there's quite a bit that you get here. These are all available, right? Now 80GG, now if you have 60,000 rupees available for paying house rent. Now this is applicable for people if you're not actually paying or taking benefit of a HRA. So if you don't have an HRA component in your salary, then this 60,000 is available to you. So for all those people who are not taking benefit under HRA, you've got this benefit available to you. If you're taking benefit of HRA, then this benefit is not available, but it's there in front of you. A lot of you have taken education loans for higher education. All the interest that you're paying, completely deductible.
Irrespective of how much it is?
Yeah, irrespective of how much it is. So which is beautiful, right? Because any amount of interest that you've taken, any amount of interest that you're paying, now here you don't even have to plan because you're automatically paying EMIs, I'm assuming. So just look at the bank statement that your education loan provider gives you, and all the interest that you've paid is deductible. How wonderful is that? You got Section 24. This is your standard, for all the people who borrowed to buy a house, and up to 2 lakhs of interest, is payable. So now if you've borrowed this jointly, that is you and your spouse, both of you get a deduction of 2 lakh rupees each.
Okay.
So which means there's 4 lakhs of interest saving, which means if you're paying even a substantial amount of EMI, 4 lakhs out of your income can just go away straight away.
And non-taxable.
And absolutely non-taxable as well. While we're talking about housing loan, we must also mention there is a provision for principal repayment. So people who are actually in the mode of paying EMIs for their housing loans, Section 80C also has this 1,50,000 limit where...
Okay, so you can include the principal.
You can include the principal there as well. So if you've got some principal repayment going, then you don't even need to invest.
And you have one last option over there.
So this is an interesting one. This is for your savings account. See, all of us keep money in our savings account, right? And all the time we are earning some amount of interest on that. So up to 10,000 rupees if you earn interest in your savings account, even that's exempted. So there is automatically a lot of provisions available
even for those who don't essentially make any investments, they're too lazy.
Absolutely. So for example, your Section 24, let's put an A on this. This is automatic.
Right.
This is automatic. You already got it. Education loan is automatic.
And the provident fund.
And of course, your EPF is also on auto mode.
All right. So we have 10 days now.
Yes.
What can I do at this stage out of all these things? I can't obviously take a housing loan at this point.
Yes, of course. You can't take a housing loan. There are a lot of things you can't do. Sometimes you cannot even take a life insurance policy, which is going to be of a large amount because they'll require you to do a medical examination. The reports have to come. The policy has to get issued.
Fair enough. So what can I do right now?
So what you can do, for example, you can look at, let's start with Section 80C, and assuming that you've got something balanced there, you could do PPF.
Okay.
Okay. So if you're slightly conservative and you want to take a 8% rate of return, you can do PPF. To my mind, this is a fantastic option. It creates the maximum wealth for you, equity-linked savings schemes of mutual funds. This is something you can straight away do. Okay. In terms of Section 80C, you could buy a health insurance policy if you've not got it for your parents, or if you want to top up
So
or
that's
upgrade.
55,000
You
right
can
there.
do both these things really quickly and really fast. So you can even do NPS if you like,
Right.
and that's available quickly as well.
So those are the things that I can do as of now.
Right away in the next 2 days.
Well, hopefully that a run through of everything that you can do to save taxes will help you in this year, and also perhaps to save tax next year if you plan well in advance. Thanks so much for watching.